Hey.
Yo,
we in it.
Welcome to I'm Not Racist, My Friend's Black.
Yo, we with the homie Josh.
With the homie Josh.
We had to bring you on because every time we're with you, you say the smartest things.
Yes, he does.
And we've been trying to get into real estate specifically for years. And I think for a lot of people, it's kind of a scary thing to get into because you hear a lot of like, oh, the market crashes. I lost all my money, or I lost all my money in real
Scary
estate.
shit.
A lot of fear talk.
A lot of fear,
for sure.
and it seems like, I'm trying to buy a house or I'm trying to invest in an apartment, and it sounds like, oh, it's a $500,000 or it's $1 million, and it just sounds like
a lot.
I can't do that.
So, I mean, I guess maybe just tell us like what you do.
Oh yeah, I'm a loan officer at a company called Malibu Funding. And then I also do real estate development too. And I have my own company that does that.
Malibu.
Okay, Black excellence.
And something you were telling me at dinner, because I've always had the idea and the impression that investing in real estate in LA is like hard, or it's like maybe it's not the fastest growing market, but I know you have a lot of experience. Otherwise, like, you've been making money out here. So.
Yeah. I think I want to warm him up first with some questions, just so he can
that's
you know
fine.
what I mean? Okay, so I'm gonna ask you a couple questions.
Okay.
And whatever, there's no right or wrong answer. Just do you. Oh, okay, wait, we have to take our shot first, because this is like, when you come on this podcast, you have to take a shot with the homies. All right.
Okay.
Here you go. This is yours. All right, cheers.
Cheers,
Cheers,
guys.
y'all.
Thanks for the tequila, Frankie.
Thank you.
Thank you, Frankie.
Thank you.
That shit hit hard. I don't like that. Okay, so.
That shit hitting hard, and I don't like that.
Called the wifey and got a dime back.
Exactly. Exactly.
Bars.
Okay. Okay. If you had a boat, what would you name it?
If I had a boat, what would I name it?
Yeah.
Lil Yachty.
That was good.
Hell yeah.
All right.
Hell motherfucking yeah. Okay. Now, next question. If you could become best friends with any celebrity, who would it be?
Oh.
Dead or alive?
This is a good one.
Yeah.
I would have to say Stephen Hawking.
Oh, okay.
Yeah.
Okay.
I would just like really just anytime someone asks me something, I you know what I mean? I just I would
Is that the creator of?
It's the scientist.
Yeah.
Oh, right. That was in
that
the
talks
wheelchair,
on
right?
the
You're thinking of Stephen King, the horror guy.
No, I'm not thinking of him.
Oh, okay.
Yeah. Okay. Good answer. Okay.
I think so.
Fuck everybody. All right. If you could become an expert at anything, what would it be?
Oh.
That's a good one.
Yeah.
Yeah.
I think a lot of people are like, oh, I want to do this, but I just don't have the time.
Yeah.
Yeah. I would want to become an expert in, I think, just like spiritual studies.
Yeah.
You know what
okay.
I mean?
I fuck with that.
If I didn't have to work and all that stuff, that's like kind of the thing that I'm interested in.
Yeah.
You were like a Shaolin monk, like you're just considered an expert. People respected you, like, oh yeah,
Oh, yeah.
Shit, he look racially ambiguous. You know what I'm saying? A lot of people couldn't.
Yeah, I reached Nirvana. Yeah, I'm enlightened. Whatever. I mean, if you just like,
no big deal.
we're enlightened, just casually. Yeah, I'm a
Casually.
master.
Yeah.
Spiritual arts, whatever. I'm Doctor Strange.
Yeah, basically.
I got portals.
Damn. Okay, Portal Daddy.
Yeah.
Okay. What horror movie scarred you as a kid?
Ooh. Oh my God. This is
Tell us.
scariest movie ever. Tales from the Hood.
Yeah, agreed.
I don't know what this is.
You've never seen? Okay,
Scariest
don't
movie
worry.
ever.
The one that had those little nigglets and had the little dolls running around.
Yeah.
Yo, those dolls fucked
What
me
did,
up.
what did you say? Piglets?
No. No, I said nigglets. Okay, so let me give you a little backstory because I can't just say that word.
That sounds like a chicklet, like a little pop.
Nah, cuz. All right, listen. Okay, so basically, it was a story about this guy who used to own this plantation, and there was a mural, right? And so basically, the plantation was run by slaves, obviously, but there was this mural of this mammy who was like the grandma, and she had a bunch of children. Okay, so for some reason, like because it was like kind of like what is it when it's not real? Fictional. It's a fictional story.
Hopefully.
Yeah, but no. So basically, the mural comes to life, and it's all these basically children, but they turn out to be dolls.
It's like Children of the Corn.
Exactly, and they come to life, and they like kill people who come into the house. So this guy who came into the house basically called those little dolls nigglets, because nigglets, half of that niglet. So anyways,
little baby ones.
But the scariest part though was there was like a mural of them on the wall. And that's when they all had jumped off of the wall and turned into little dolls. But one time the guy hit the wall and the wall started bleeding, and I was like, oh my God, I had to turn the lights on.
So that just scared you, scarred you,
Scarred me.
Yeah. Okay, this is a really good one. I'm very interested to see when you're going to answer to this. Okay. If you were arrested with no explanations, what would your friends think you did?
What would my I would say something that involves a lot of drunkenness and nudity. I don't know.
Which one? Okay, all right, good answer.
I think a mixture of both.
I get that. Okay.
I was gonna say some real estate crime where you just
oh damn, don't say that.
Putting some accounting stuff under.
Shit, no.
The books. It's like no, I swear, I didn't. I don't know. You just way to fudge the numbers. I know it's a real thing.
Oh my God, scary. Okay, and then last one is one person in history, dead or alive, that you would like to party with.
One person in history, dead or alive, I would like to party with. I would say David Bowie.
Wow,
okay.
Good answer.
Wow, I'm actually surprised by that.
Yeah.
Answer.
He was married to Chanel Iman.
Yes.
Mm-hmm. Yeah. I'm sorry. I'm sorry, not Chanel Iman. I'm so sorry. Cut that. Iman. Iman. I'm sorry. I just always think of Chanel Iman because she's so beautiful. But Iman.
Yeah, I saw this documentary about David Bowie from followed him from the 60s. I mean, just different clips, 60s to the 2000s.
Yeah.
Yeah, he's a really
rock star. Yeah. Have you ever seen a movie that he was in called Labyrinth?
No.
Okay, so it's about
I have.
He's like this wizard in this movie, and it's about this little girl going through this labyrinth and just all this mystical shit happening to her. The movie's good as fuck. It's called Labyrinth. Put that on your list. 100%.
Isn't there there's this little worm or something that's telling him what to do, trying to, I don't know.
Worm? I don't know.
The beginning, yeah.
I don't know. We piece shit together over our lives.
I found it really interesting though that when I watched this documentary, he actually got credited with discovering Luther Vandross.
Oh, really?
Yes. Real talk. He was one of his albums he was recording. I don't know the name of it. I think it was in the 70s.
Yeah.
And he had it was really gospel, heavily gospel influence. And there's video, Luther Vandross was a no-name guy in this choir and was on the album and was a star after that.
Wow. So, okay, shout out to David Bowie for being down with the culture.
Shout out to Luther Vandross.
Yeah, straight up. Seriously.
Rest in peace.
Yeah, rest in peace. Okay, and this is another one of my favorite games. I'm going to say a word, and then you need to reply with one word that, whatever word comes to mind. Okay? Okay, just one word, though. Okay. Florida.
Irresponsible.
Got him.
Got the ass. Okay. Ocean.
Blue. Corny. Okay.
No, it's cool. It's cool. Compton.
Oh, Bompton.
Hey, Bompton.
Bortney.
Yeah, that's what I was going to say. Courtney. So Josh calls me Bortney, for anybody who doesn't know that. My name is Bortney to Josh. Okay, light skin.
Oh. Light skin. Me.
Yeah, okay. Success.
One word. I was going to say.
One word.
Success. Abundance.
Okay. Abundance.
Oh, that was really
next
on
one.
the list.
Yeah, yeah, that was the next one actually.
Oh, success.
Nigga.
For abundance, I would say abundance goal. That's
yeah. Okay, cool. And then disrespectful.
Disrespectful. Trump.
Cool. Done. Word.
Fuck Donald Trump.
Donald Trump. I'm like. Okay,
quarantine.
cool. Yeah, nigga, quarantine, COVID, for real. Okay, cool. Well, I think it's important because we have had a lot of cool people on here who are signing record labels and influencers and a lot of cool shit. But I think it's important to have somebody like you that kind of looks like us. You know what I'm saying? Who's doing something different that we don't know as much about. So that's really important. And what's your ethnicity again?
I'm half black, half Serbian.
Okay, cool. Matt thought you were Latin, and I had to tell him that you have struggled with that because people think you're Latin and you're not. So just want to tell everybody, Josh is not Latin.
Not Latin.
Latin.
I'm a black male.
He's a black male, black and Serbian male.
Put me on blast.
I'm just saying shit. Sorry.
No, but it's good. We wanted to have somebody on the podcast we can learn from. We can like ask you some questions. And yeah, we've been trying to break into some of this real estate stuff and just get on some of this opportunities.
Yeah. Okay, so I guess we'll start with is how do you get started? Like, what are the qualifications?
Good. Yeah, so I mean, younger people that I deal with that are clients now, because now people are kind of getting to that age. I've been in real estate for 9 years. Mm-hmm. So originally I didn't really have too many friends or peers that were interested in it, but now I'm starting to, come across people that are trying to qualify. So that's really cool. But you want to start off by contacting a lender. So a lender is going to actually pre-approve you. So typically they're going to ask for, 2 years tax returns. Okay. If you're W-2, most recent pay stubs covering a 30-day pay period, they want to see, most 2 months, most recent bank statements to make sure that you have enough money for the down payment and funds to close. Cool. Also have to run your credit report. Also, there's a plethora of different programs, but that's kind of like the basis of what's needed to see what's going to be the best fit for you.
Got it. Yeah. Got it. Okay, cool. And is there like a certain like credit score that you need to have, or is it the accumulation, or it's not the accumulation, but the collectiveness of all the information together? That's that like, you know what I'm saying?
Yeah. There's different requirements for certain programs. FHA loans, they're lenders that'll take FICOs all the way down to 580. Okay. Some stuff has kind of changed since COVID-19 has come into play, because there's a lot of people that are putting loans in forbearance and all that stuff. So different lenders are making new guidelines to kind of mitigate risk. Okay. But yeah, there was a time when there were some lenders that would do FHA loans all the way down to 500 FICO. Okay. Depending on what's on the credit report, right? A lot of times when your FICO is that low, then you're not going to be able to qualify based on the number of late payments or things like that you have. But there are possibilities for you if you don't have a credit score that's up to par.
But either way, better credit score, better loan.
Yeah, yeah. And better interest rate always.
Got it. Yeah. And would you say if somebody who has an eviction, is it harder for them or is it impossible for them?
That has an eviction, yeah, it's not impossible for them. It just depends. If you've just got evicted, and then you're trying to buy a house or a property like the next month, then that's going to be an issue. Right. They're going to be like, okay, usually, there's a thing that they have to do to verify your most recent 12 months rental history. Okay. Right. So if you're, you can actually live rent free and, have a letter of explanation saying that you've been living rent free, and that's okay. But anytime that you're living in a place like right now, if you guys are renting, you'd have to get this form filled out called a VOR. It's a verification of rent that your landlord would fill out to make sure that you've actually been current on your rent for the last 12 months.
Got it. Yeah. Got it. Okay, cool.
This is something I saw on YouTube, so hopefully hopefully this is a real thing. I'm not just making it up. Welcome. But I guess if like young people, they're trying to get like a good deal on real estate, something they can maybe make money from. Do you know what a wedge deal is? Do you know anything about that? You familiar with that?
Or is a wedge deal like a bridge loan? Or?
Something with buying houses like at a certain price point. I don't know what I'm talking about. That's why we got you here, man. We're trying to learn.
That may be like a nuance that someone is kind of personally explaining, but that's the term for it is not like a widely used term in real estate, I would say. Okay.
Like I guess better question is like me and Courtney were like, all right, we're going to do this. We're committing. We're going to get into real estate. Yeah. How do you go about like finding good deals versus just something that everyone's going to find? Like, where do you look?
Obviously, so let's start with just where everyone already looks. Usually people have an agent. Mm-hmm. The agent is shopping deals on this thing called the MLS, which is the multiple listing service. So that's where kind of all states have, a kind of a lockdown on agents and where they list properties and all that stuff. So that's where everybody's looking for deals. So that's when you find a deal, you can find a deal on the MLS, but everyone has access to that. So everyone can see that. So you may not find the best deal there, but there used to be a thing called foreclosureradar.com. that we would use, and that kind of.
And this is just to find listings.
Yeah.
Okay.
But foreclosure radar would be actual properties that like are in default, right? So so anytime that someone is 90 days behind on a mortgage payment, then the lender files this thing called a notice of default, and then it's recorded to the property. So that's public record information. So this site would actually track all of those properties that are in that, space between foreclosure, because once the notice of default is filed, there's like a certain cure time that that person that owns the home has to be able to, catch it up or sell it on their own to pay off the debt before the actual lender is going to take the property and then put it up for sale.
Okay.
And then that goes into like a public auction kind of thing where you can still find a deal in an auction, but once it goes to auction, everyone also has that information too.
Got it.
And they show up to the auction, so you may get overbid and it might be a waste of time. But finding properties that are actually, in default or people that are in distress of some sort, that's a good way to find a good deal.
So is it a good deal because it's lower than it would normally go for because it's in default?
Oh yeah.
Okay.
A lot of times when someone is in distress, for whatever reason, they don't have as much time to negotiate. They can't.
They need to get out of the deal right now, so you got more leverage.
Got it.
Exactly. But also too, something that I do too is look for fixer properties. Fixer uppers. So, I've done flips. I did like a flip in Mid-City last year where we bought it for $600,000. Added, it was like a 2-bedroom, 1 bath.
Okay.
And someone that I knew had the listing, an agent that I know. And the woman that was selling it, she was like 94 years old and she was going to a retirement home. So she wasn't looking to break the bank with her selling it. She bought the house for $40,000 in the 60s. And, so she sold it to us for $600,000. I'm sure she could have maybe gotten $750,000.
But she bought it for $40,000.
Yeah, in the 60s. Yeah.
Ooh, honey.
That's called inflation. And that's why I kind of tell everyone to whatever point you're in or wherever the economy's at, just buy something now, because just by how economics works, in 20 years with inflation is going to be worth a lot more than it is when you bought it. So, and LA has a huge, I would say, I don't know the exact metric, but Los Angeles has higher appreciation value than a lot of other states. So, but yeah. So anyway, she sold it to us for $600,000, and it was a complete fixer upper. Like everything outdated. It's like she maybe didn't do repairs since the 70s to the house.
Right.
We remodeled the entire house. It was a 2-bedroom, 1 bath. We added 500 square feet to the house and made it a 3-bedroom, 2 bath. So then it was 1,600 square feet. And then we built another unit in the back of the house, which was a 1-bedroom, 1 bath, and it was 500 square feet. But it was easy to get that permitted because the city of Los Angeles has a thing that it's called an ADU. Have you guys heard of that?
No.
Yeah, so an ADU is an accessory dwelling unit.
Okay.
So because like the housing, I'm sure you've heard that there's a housing crisis in LA. Yes. There's a shortage of housing and affordable housing at that for renters and all that stuff. So the city of LA, LA is if you look at the houses in LA, like most of these houses were built in either the 20s, 30s, 40s, and there's not a lot of space to build something.
Yeah, build new.
Yeah. So with that's one of the main causes of the housing crisis or shortage in LA. So the city of LA passed this code to where people can, build this granny flat, they call it, or an accessory dwelling unit, which is, there's certain, you can either convert your garage into a 1-bedroom, 1 bath unit or 2-bed, whatever works there, or you can actually build another structure.
I used to live in a place like that. Yeah.
Yeah.
I see. So, okay, here's my question. Okay, so she sells the house that she bought for $40,000. She sells it to you for $600,000. You give her that money. Now, when you do the renovations on that house, who's paying for the renovations? Do you have to take out of the $600,000 to do that renovation?
No. That's on top of that. Yeah. So we sold the house for 1.2, and that's another thing. So, and COVID-19 has kind of switched up a lot of like construction lending stuff, and so there's other loans called hard money loans, right? So most hard money loans, their whole game is like they lend to flippers.
Okay.
Right? So most people that do flips in LA use hard money loans to do this work.
Yeah.
So a hard money lender knows exactly what you're doing. They kind of rate you off of your experience, whatever liquidity that you have. But there's other, they'll even lend to anybody that doesn't have experience, it may be a higher interest rate, but if it's really based on the deal. You can have terrible credit, all types of stuff on it, but they're really lending to you based on the deal. So just to give an example of something that I did, so we only had to put down 10% on that $600,000,
Okay.
$60K.
Okay.
Paid maybe $18K in closing costs.
Okay.
So paid that out of pocket, but then they loaned us $240,000 to do all of the repairs to the
Okay.
house. But what they do with the $240,000, so the woman is paid off with our $60,000 that we paid plus the other 90%, the $540 that the hard money lender loaned out. So they got that money. She got that money and walked away.
So the hard money lender's giving her the 60 plus the 540.
Yes.
Okay.
Yeah,
okay.
I'm giving her the 60. Hard money lender is giving her the 540.
Okay.
She's paid off. Now this other $240,000, they are releasing that money to us in draws, right?
Okay.
So, we have to actually have our contractor do the first amount of work, send photos, and an inspector comes out, and then they're like, okay, now we'll release 30 grand to you. This is equivalent to 30 grand. We'll release that to you, right? Let's do the same thing. Use that money to keep doing stuff, come out and inspect, release it to you in draws. And the reason why they do it like that is just to kind of mitigate risk on their side.
Right.
If they have to actually, jump in and finish, they can give you the whole 240 up front, and then you go to Mexico and now they still have to spend money to fix the house and do what was the plan. So that's kind of how that works. And literally anyone can do that.
Okay.
If you have down payment money.
And then how do you find a hard money lender?
Oh, I mean, that's easy. I even broker hard money loans with people, and just, ask around, Google.
Okay.
If you don't know virtually anyone in real estate, which is, right now, everyone knows somebody that's in real estate. So you can be connected or just Google it.
Okay, cool.
People will come up.
Cool.
So when you're doing one of these deals and you're like, cool, 600 grand, and you ended up selling it for 1.2 million. Mm-hmm. Are you kind of aware of what you can sell it for in the beginning? And what is that based off of? Just looking at all of the market, all the houses, like based on, it's if we can turn it from a 2-bedroom to a 3-bedroom and it has this amount of square foot, is a lot of it square footage and how many bedrooms it has?
Exactly.
And how many bathrooms?
Exactly. That's exactly it. So all they do is we look at comps.
Right. So I guess if you find something, you're like, I'm gonna add another bedroom to this, then you kind of know you're able to flip it for like a lot more money.
Yeah, and all you do is, that's a great way to use the MLS, because then you look at, you can do like a little criteria search and see, okay, what's sold, within this area at the proposed square footage. So if we had 1,100 square feet in the beginning, then we can type in, 2,000 square feet or 16, whatever it's going to be.
Right.
And then do like a radius search of a quarter mile, because you want to do the closest, and then you kind of go out if you don't see anything in a close proximity. But that's pretty much how you do it. And then that's how the lender's going to do it too. So wherever you see it, the lender's always going to be more conservative than where you see it. Right. So, but if it works for them, obviously then it, it can be a good deal, because they're very conservative in how they look at that. So it has to be like a home run. Like I saw 1.2 for it from the jump, but the lender saw kind of like 1.1-ish for that. Right.
So are you just assuming, like, when you approach this lady, are you just assuming that someone's going to buy this? Like, how do you know? Like, you just invested all this money, you got a hard money loan. Like, how do you know? Like, do you know what I mean?
So then you kind of get more detailed in like the data that you're looking at. So even before you buy it, and then I'm projecting like, okay, 1.2 is going to be the sales price.
Yeah. Then
I'm also looking like how many these houses that I'm basing that 1.2 on that have actually sold, like how many days did these houses stay on the market?
Okay.
You get what I'm saying?
Okay.
If you see that everything is kind of selling within a 30-day time frame around the price that you want, then it's a pretty good deal. Unless like, there could always be something crazy that happens.
Right.
And, everything can go to shit. But if you see that, there's times if you see like, things are staying on the market for like 65 days, 90 days.
Right.
Then it's, then it's kind of.
Well, but it kind of fucks you though, because if you have a hard money loan and you don't sell the house, you still have to pay the interest on that loan, right?
Oh yeah. And it's very high interest payments.
Like, what would you say? Like,
ours on that one was 8.5%.
Wow.
And the reason why it's much higher interest is just because it's a very risky loan, for them. And it's not based on any income documentation or anything like that. It's solely based on the deal. So,
right.
And that's why they take that risk. They want a good return. And they charge you points too when you, originate the loan and all that stuff.
Got it.
Yeah.
Okay.
But no, it's it's very risky, but people that do it consistently know enough metrics to, come out, on top when they do it.
I think there's a big movement, especially with young people that aren't buying houses. Number one, like a lot of young people are renting.
Yeah.
Like me, like you, for example.
Yeah.
What would you say to a lot of people that are saying that it's actually, for making money, it's actually not smart to buy a house for themselves? And even real estate people, I see a lot of real estate people that they own like 5,000 rental units and they don't even own their own house. They just rent. What's the strategy to that? And like, why is that a growing trend?
I actually agree with that. And it's even in a book called Rich Dad Poor Dad.
Yeah, I read that book.
Yeah, we both did.
Yeah. I mean, it's even going back to what he's saying in the book. You gotta look at it like this. So cash, right? Like the cash that you have, cash is very valuable. And when you put cash, a lump sum of cash towards something, the best use of it is to actually be getting some sort of a return on that cash. So like leaving it in the bank does nothing for you because you're getting, 1%, maybe 2% on the year if you're lucky. Putting it into your primary residence, right? You go buy a house for $1 million and you put 20% down and get 800,
it's not making you any passive income.
And it's creating another liability for you, right? So now you put this 200,000 in here. It's locked up into this house. And then I also have this mortgage payment that, I have to pay now also, right? So even that mortgage payment may be comparable to renting something like this, but you can live in something nice and then use that 200,000 to go put on an investment property that's, multiple units, and it's giving you,
it's like, I don't got to pay for maintenance. I just hit somebody up online. They come and fix it.
Exactly. And then on the rental property that you purchased, the money that you're getting from the rents, you create a reserve account and then you can pay for maintenance on that with that, so, and even if, when you do it right, you have enough passive income from investments that can cover where you live, here. So,
I mean, I know this may seem like a very like hard question to answer, but what would you say, like for our peers, what would be a substantial amount or sum of money that you could bring to the table to start investing in real estate?
I would say this, and a lot of my young clients, I just closed a deal with a client that did this. Depending on what area you're looking in, right? So, someone I did a deal with, they bought a 4-unit in San Bernardino, right? So their down payment, I think the purchase price was $590. Mm-hmm. Down payment was around like $16,000-17,000 for a 4-unit.
Okay.
Plus closing costs that they had to buy. So the way that they did that is they bought it with an FHA loan.
Okay.
So an FHA loan will allow you to do 3.5% down of any purchase price.
Right. And
you can purchase anything from a single family house to a 4-unit. I always say this is a good house hack for people that are renting. Mm-hmm. Go buy this 4-unit and go live in one of the units, right? So maybe your mortgage payment is $3,000 or $3,200 a month, mm-hmm. but then you're getting, maybe, I don't know. I think they were getting like maybe $1,200. I think their total rent that they were receiving for that one was $4,500 a month or something like that. So living in one of the units, the rent from the other units is pretty much covering their mortgage payment. Right. Then you live there for maybe, I think FHA requires you to live there for 6 months or a year.
And what do you mean by it requires you to live there? You don't technically have to live there, right?
Well, no, you do. Yeah.
Oh, you do?
Yeah, because this is an FHA loan is for owner occupied buyers.
Okay.
So they're not letting you, they give these low money down opportunities to people that are actually going to buy a primary residence.
Got it. They
know that there are a lot of people that kind of take advantage of this stuff and try to use it to scoop investment properties.
Yes.
And, that's something that's not allowed. But if it can still be that for you if you live there for a short period of time.
Got it.
How long you got to live there?
I think the requirement is 6 months, but it may be a year. So one of the two.
Hey man, years fly by. Like,
yeah, seriously.
When my landlord hit me up and was like, "Time to re-sign your lease," I was like, "What? 13 months?
Exactly.
Exactly. Damn. Yeah, that shit flies by, man.
Yeah, and then that's a good time to save money and all that stuff.
And can you have multiple FHA loans at once?
It used to be something that you can do. Now it's still something that you can do, right? Because FHA looks at it like this. If the ultimate goal for you is to buy a single family house, right? So if you start off with a 4-unit and then, a couple years later, after you want to move out from this, 4-unit and you want to get another FHA loan to buy a single family house, that's actually justifiable for you to get another FHA loan.
Okay.
It's not, there's still a lot of gray area with that. And in the past, that's something that people actually could really effectively do with no question. But now, maybe not. But then also too, there's not just FHA with the low money down. Conventional loans have a 3% down payment, which is like a home ready conventional. So, or 5% down payment conventional loans. So I've done loans for clients that have had an FHA loan and then flipped to a 5% down conventional.
Okay.
Yeah.
Interesting.
What are some like nightmare stories you've heard of people like, trying to do real estate and they get burned, or like what are something you could look out for so like it doesn't happen to somebody new in the game?
Oh yeah. Well, if you're doing like flips or something where you're renovating a property and
just not calculating like the construction costs and stuff like that correctly, I'm sure
that can be one, yeah,
really burn you.
But also too the contractors.
They overcharge.
That's the biggest nightmare. There was one property actually that when I first got into real estate, my partner and I started with finding properties for his dad because his dad was like a big developer and a mortgage broker and real estate broker, all that stuff. So he would tell us, okay, find the deal for me and then you guys project manage it so you guys can kind of learn how to do this. So we found him a deal on Beechwood in Franklin. And look, this property of 1950 Beechwood, it's like really, I'm very proud of it because we really did everything and led the whole operation. It's like a nice triplex now. All the units are 3 bedrooms, 2 bath.
Wow.
And it started as a really old duplex, right?
Yeah.
So basically tore everything down, left one wall up. And for some reason doing that, it's cheaper on the permitting cost because it's actually still considered a remodel as opposed to a new construction.
Mm-hmm.
So
keep the bones.
Yeah, exactly. So yeah, we did that, but there was this contractor that we were dealing with. And because my partner and I really didn't know any better, and this was our first really big thing that we were working on, this guy was finessing us like crazy.
And a contractor is somebody that comes in and helps you with the remodeling.
Yeah, they actually lead the construction. Okay.
So
they lead a crew and all that stuff,
okay.
and you work out the numbers and stuff with them. This guy, what he was doing, he was, because we would he would use, our company credit card to purchase the materials at Home Depot. But he knowing that we were kind of newbies, this guy was buying way more materials than were needed, using them for other jobs. Then we found out that this guy had someone working on the inside at Home Depot and was returning materials for either gift cards or sometimes she would give him straight cash for the stuff.
Wow.
And so he ended up,
how'd you catch him?
Dude, because we kept getting to...
You're looking at the receipts and you're like, damn.
yeah. And then how much money? So the contractor gives you a bid up front, right? So you kind of can map where, you don't, the same thing, we don't release all the money to him up front. By the time he hits certain progress points, there's certain things that are supposed to be done based on the contract. So this guy kept asking for more money and trying to, hit us with all these change orders. And just something wasn't adding up. We had spent so much money and then I was like, hey dude, we should be much farther along than this. So then we kind of started analyzing everything and we're like, okay, started investigating it and called Home Depot. And Home Depot actually did some type of internal investigation and found out that lady was doing that.
So what ended up happening with him? Did he?
We ended up filing, we kicked him off the job.
Yeah.
And then, we got a new contractor on, still sold it for $2.4 million. And, the company made money and all that. But then we filed a lawsuit against this guy. But this guy disappeared and went to Belize.
Oh, shit.
Right? So,
God damn, boy.
I'm out.
So he didn't even care about his contractor's license or anything like that, because he was like, fuck this, I'm out of here. And so
probably got away with it so many times.
Probably, dude.
Expect,
yeah,
you know?
100%.
Yeah. And so then he was in Belize, and then we got a default judgment against him and his insurance company, because to be a general contractor, you have to have like an insurance policy that covers you for up to $1 million in damages or whatever. So the default judgment was for like 700 and something thousand. But the insurance company somehow found a way to get out of it because he was not cooperating. There was some loophole that they used to not cover him and what he was doing, because he wasn't still active. Because
he left.
So, yeah.
He bounced.
He bounced on that ass.
Yo, Home Depot. Now I don't know.
Tricky ass.
Trusting
place.
in Lowe's. I'm gonna go to Lowe's. Yo, it was someone when I first moved to LA, like somebody that I was working with, they were like, yo man, I can pay you. I know a guy at Home Depot. If you give me your ID, and he'll give you a bunch of money for that. Like they're trying to make like fake social securities or something. I'm like, Home Depot, what are they doing over there?
Yeah.
Suspect at.
Yeah, I don't know.
I think Lowe's is they have a black CEO, so we're going to Lowe's.
Yeah. Lowe's is supposed to be more friendly with that.
We at Lowe's.
I don't know why. I have no idea why.
Shit.
Yeah. But hey, I'm invested in Lowe's, not Home Depot. But
yeah, I feel that. Would you say, just being, Black, would you say that you encounter a lot of people who are Black in the real estate industry, especially in your world? Or would you say it's 50-50 or?
I think, maybe real estate agents. I encounter more Black people as agents.
But not mortgage brokers.
Yeah, like loan officers and stuff like that. Not as many there. Very few and far between, actually, in that world. It's funny that I have a friend that's my
and you're
age,
pretty
so-
young doing this too, which is like, that's really rare. I feel like I don't know anyone else your age, that's as deep in as you are. So that's pretty fucking cool.
yeah, I think it's probably easy to like underestimate someone like you.
Yeah.
Oh yeah, for sure.
100%.
Yeah, I'm sure you're talking about cool, whatever.
And he's like Beachwood Canyon, bitch.
I think one thing too that I learned, that the one talent that I have is like being able to communicate this stuff to a certain demographic that really doesn't understand it, but being able to explain like complex things to them in a way that they can understand.
Yeah.
And then like back it up with actual like that's why I like doing loans for people, because it's all backed up by numbers. So numbers can't, you can't lie, and it's it's kind of cool. I feel like it empowers people when you.
Would you say this is your dream job? Like this is what you love this?
Yeah, I actually love it. Yeah.
Okay. Yeah. You seem really passionate about it every time I talk to you. So it's like, that's cool. Hell yeah.
I don't know why. That just made me think of that line in that Lil Dicky song where he's like, "This my dream, Dick." You know what I'm talking about?
Yeah. I fucking love that show though. I ain't gonna lie. That's funny. But yeah.
What would you say to the people that I feel like leading up to the pandemic, there's a lot of talk of like, oh, there's about to be another real estate crash, like happens every 10 years, like blah, blah, blah. And then even when the pandemic was happening, a lot of people were scared that landlords weren't going to get their rent paid, and like it was just a bad time for real estate. I'm a little bit invested in real estate, but nothing like crazy. So, what would you say to people that, because stocks are crazy right now. People are really investing in stocks heavily.
Heavily, yeah.
Do you think people should be scared of like real estate? Whether it's stocks or like REITs or like just the market in general, do you think it's coming, like a crash is coming, or do you think that's bullshit?
No, because even I was watching the Fed chairman Powell talk today.
Yeah, he ain't letting anything slide. He's like, "No, I'm paying. What do you need?
Yeah, exactly.
Any money you need, I got you."
Yeah, and that's the only reason why I say that. And he even spoke on this topic in his interview that he was doing, and he was saying that basically they're doing everything in their power to make that not the case. He's saying this is very different than the recession in 07.
Yeah, because that's what I was going to ask you. I wonder if it's like when something that bad and catastrophic happens, it almost makes you better prepared in the future.
Yeah.
And they're almost being overly cautious now.
Oh, yeah.
So what would you say to someone who just doesn't fully understand all this stuff? Like, what was the difference between that time era, you know, because I know there was a lot of shady loans happening versus now.
Exactly. And The Big Short is a great movie to watch.
Right, I love that movie.
Yeah. So yeah, I mean there was a lot of bad loans that were in fraud that was happening in the industry at that time, and then
there was people like they were shorting the loans, which is what the movie was about. So it was like bad loans, and then on top of it, people hoping that the loans essentially go default. That's kind of the idea.
Yeah, because all of those loans were based on like no documentation and a huge amount of them, and then a lot of them were being packaged as like grade A plus, you know what I mean, loans and stuff like that.
So would you say that a lot of the issue was how they were labeling it to the government and to just the people in general, like the market? It's like everyone thinks like, oh, the market's great, but really they're labeling the quality of the loans improperly.
Exactly. And just originating it based on there was no, for the most part, like the people that I know that are older in the industry, they say, oh, you know, back then if you had a pulse, you can get a loan. You can be an animal and get a loan.
So it's a little bit more regulated now, is what you're saying.
Oh, no.
Because you're a loan officer. That's part of what you do. You give out loans. So, I mean, you're telling us we got from your mouth, it's a lot more regulated now. It's harder.
So much more regulated.
This isn't 2007, 2008 right now.
Yeah, no, the Consumer Financial Protection Bureau, the CFPB, was not even in existence back then. And that was something that was created as a result of the Dodd-Frank Act, which was something that was created as a, you know, result of that to protect the consumer against, you know, this kind of behavior again from people in that industry. And now it's there. You know, back then loan officers didn't even have to have a license. Now you're required to have an NMLS license. Like it's much more regulated. But now Fannie Mae and Freddie Mac are, you know, government sponsored entities now. So there's a lot of government involvement on, you know, conventional loans and all that stuff. So there's so many protections that are put in place now. So that's not the case of what's causing this recession. This recession is actually caused by the government telling you, hey, everyone, you guys can't go to work. You know what I mean? So I would take that recession any day over something that was like the 2007, 2008 recession, because this is actually government implemented. Government caused this. And that's what Chairman Powell was saying today. Like, we caused this. So we have to go through, you know, extended measures.
It wouldn't be right. Yeah.
Yeah. That's like, that would be like where, that's
like I'm sitting here, like, I don't know if I'm going to play a show till 2021. And it's like, I was playing shows every weekend before that, you know? So,
yeah.
So as a loan officer, do you make money based on how many loans you're giving out, or is that commission based or no?
Oh yeah, it's commission based because I'm at a place that's a brokerage.
Okay.
So it's all based on the deals that you do, but and even people that are at banks can be set up with that structure. But I do know some people at a bank I bank with, East West Bank.
Yeah.
They're really great. Check them out.
Yeah, shout them out. Hell yeah.
But yeah, my friend that's a loan officer there, she's salary.
Okay.
But they flood her with work though.
Yeah.
So I kind of like being
like overwork her.
Okay.
Yeah. For like her, you know, and I think
it's like punching in and punching out. Like.
And so like for a job like this, which is so interesting because I don't know if people know this, my mom is a loan officer and she works for a really big credit union in Minnesota.
Nice.
But I've never really asked her about what she does. But do you need any schooling or like any licensings to be a loan officer at all? Or?
Oh yeah, that's what I was saying. The NMLS license.
Okay.
You have to have that.
You do. Okay. And how long does something like that take?
But some banks though, not very long. There's different
like 6 months vibes or like
no. There's even accelerated courses where you can do it a lot sooner than that.
Oh shit. Okay.
Yeah, but there's sometimes though banks will let you. Oh no, I'm not exactly sure, but I've heard that some bankers have said that they didn't have to do the same NMLS stuff that we have to do as independent loan officers. So yeah,
wow.
So it's it's so interesting. It's like I could just like do a 6 month course, and then independently, I'm legally allowed to give out loans. Or do you have to partner with like a specific bank? That
you have to be endorsed by a company.
So that bank. Oh, like what do you mean?
So I'm at Malibu Funding, so they have to actually like endorse you as you have the relationship with them, right? So they kind of oversee what you're doing. So
that's considered like a real estate company.
Well, yeah, but it's a mortgage brokerage, yeah.
Oh, okay, okay, I get it. It's all making more sense.
Yeah, it is. I'm like, I didn't know shit about this.
Now. I'm about to go buy a fourplex.
Yo, low key, we about to go live in a little fourplex.
Yeah, man. FAH, where you at?
Yes.
Come on.
Okay, so a while ago, one of my friend's moms was trying to get me into NACA. Do you know about NACA?
Yeah.
So what's the difference between NACA and FHA loans? Like,
I remember, and I'm not too. I haven't done any NACA loans.
Yeah.
But NACA was something that kind of, I think they credit you your down payment and closing costs. So it's
They
like
do.
a no money down thing.
yes,
I know
up to
that
$1 million.
Yeah. I know that there was like some sort of.
What? Hello.
Yeah.
No, there was some sort of like a prerequisite that you kind of have to do.
So they're saying that. So they take your debt to ratio income and they take that amount of money. So say it's like, I don't know, $600. You have to make that on time payment for 6 months, and to show that, basically financial stability, that you can make a payment of that amount, basically saying you can make a mortgage.
Mm-hmm.
So I think that's the only thing, and I'm not sure if you have to do that with FHA.
Oh no, not with FHA.
Okay, yeah, okay, yeah, but it's for first time home buyers, so that might be also an option for people.
Yeah.
But yeah.
We kind of talked about this at dinner when we were together, but have you seen any just people like landlords, whether it's struggling with their tenants paying rent, or like you think that's going to be fine, or
Right now?
Yeah, right now during all this COVID stuff. Because I mean, you hear about restaurants going out of business. You hear just like entertainers, like they're not playing any shows. Like a lot of people just don't have what they normally have going for them.
Yeah. No, that's a thing that's actually happening now.
Mm-hmm.
Not in all cases, but yeah, in some cases, yes, it is happening. But what's being done on the back end? See, I don't know what's it seems unfair to renters to me, but people that own the properties, right? So if you have a mortgage, almost every mortgage servicer right now will allow you to put your mortgage loan in forbearance for 90 days or even 6 months.
But do you have to pay it back?
Well, the way that there's different ways that they're doing.
Some of them are forgivable, I think.
Yeah. Well, not forgivable, but they will roll. Say you have 90 days
To the end.
Yeah. They'll modify your loan and put it on the back of the loan.
Okay, that's cool.
Yeah. But then there's some people that do it as a payment plan where they pay to whatever you work out with the servicer, and then some people just want it due, after the forbearance period is over.
One thing I want to make sure that I touch on is, because you helped me with this, is the credit repair.
Oh yeah.
Yo.
Yeah.
I'll be very transparent. I was I think probably like 3 or 4 years moving into LA, and my credit score was really shit because my student loans went into default and I wasn't paying on them, and then had like a credit card that I didn't pay. So my credit score was really low. It was like 500s. And I start working with your people at credit repair.
Damn, that's low.
That shit, man, fuck you, could. Hey, yo, fuck you. Yeah, no, whatever though. Like, I didn't know anything about credit because as great a parents as I had, no one really explained to me financial stability and you have to pay your bills on time, because to me, it was like, I never had to worry about that because I was like a young teenager working off cash and like a job. So like, I didn't need credit. You know what I mean? So, but yes, I would love to talk about that company because it was a little pricey for what they did, but they now grew my credit score like over 200 points. You know what I'm saying? And that's fucking, and that's huge.
That's huge. That's
like
huge.
my credit score is over 700 now.
Oh, yeah,
and you know what I'm saying? And like, for me, like that's
in a short period of time.
In a short period. Because how long ago was that, Josh? Like, it couldn't have been more than a year ago.
It was about a year.
It's about a year. It's about a year.
About a year.
And like, that's a huge deal. Like 200 points, dude, like that's life changing. So if you want to just give a little spiel or, say who they are, that would be great.
Oh, yeah. American Credit.
Yeah.
Actually. I think AmericanCredit.com is their site.
We'll put a little link in for you guys too, so you can.
Yeah. And like a lot of my clients too, there's some clients that come to me that are not in that right spot yet.
Yeah.
And I do a lot of cultivating with them and like, send them there and just, kind of let them know what they need to do to kind of get in a position to be able to buy. So I do that with a lot of people. Like it may not be now, but it may be, we may have a 2-year roadmap of like what it's going to take for you to actually get to where you need to be. So
straight up. Hells yeah. And then, just to kind of wrap it up, let me just think, how can people get in contact with you? Like, I guess there's a lot of people that will watch this.
They're going to watch it and be like, I need that loan.
I need that homie, for real. So
I always do like the owner of Malibu Funding, Jeff Barton, he has a radio show, AM radio. So like we always talk on there, but my favorite plug is my cell phone number. Like call me on my cell phone. Yeah. Anytime, or shoot me an email. But my cell phone is 323-945-5694. And my email is joshuamalibufunding@gmail.com.
Hells yeah.
Oh,
You heard it here first. He just gave y'all some exclusive information. Don't no hoes call a line though. Ain't no hoes. Ain't no hoes.
Business. This is
Just
work,
business
work
only.
phone.
Business only.
yeah. Don't be no texting no pickup line.
You're,
or something like that, okay?
You know what I'm saying? Like, what's up? Yeah.
I mean, if it's
cool.
at like 2 or 3 a.m. and you want to say like you up, that's fine.
Don't be in here with no you up text.
Like you up? You want to talk about them loans?
Come over. What's up
You
with
what?
them FHA you was talking
Yup, how
about? What's up with that
about them
FHA you was talking about?
Trying to loan some.
Matthew.
Everyone was thinking it.
No, Matthew.
Everyone was thinking
no
it.
one's loaning any. Oh my gosh. Well, I'm just so happy you came on. I'm so
Thank you
fucking
for having
grateful,
me.
dude. Yeah, seriously. So, yeah, we'll put a little link for his email and for his phone number so you guys can get in contact with him, and also the credit repair, because there's some amazing people and you guys should hit them up. But yeah, this has been great on I'm Not Racist, My Friend's Black. Shout out to Josh. Hey. All right.
you guys.
You guys, peace.
Peace out.